Brian Hicks claims Trump has a secret mine that could make you rich. However, Hicks wants nearly $3,000 to reveal the name of the stocks in this presentation. In this video, I look at the clues in this presentation to figure out the stocks and reveal them here for you for free. Just drop a like and subscribe if you appreciate me saving you thousands with this video. Let's quickly look at the clues in the presentation to figure out the first stock. It starts with the headline, How Trump's Secret Mine Could Make You Rich. The headline continues, China's export ban has forced the US government to fast-track its only domestic supply of one critical resource. This material powers everything from bullets, bombs, and missiles to iPhones, computer chips, EVs, and energy storage batteries. As the government pours $2 billion into bringing this secret mine online, this tiny $10 miner, along with its $1 partner operating the only refinery for this critical metal, is set to skyrocket. The idea in this teaser is there's a material that China owns 90% of the world's supply of, and they're banning the exporting of it. Without this material, America would be in a crisis because this material is essential for bullets, missiles, grenades, radar, fighter jets, and other battlefield technology. And this material is needed for iPhones, computer chips, solar panels, EVs, batteries, and energy infrastructure. The material Hicks is hinting at is antimony. Antimony is a brittle, silvery white metalloid used primarily in alloys to improve hardness and strength. It is also used in flame retardants, batteries, and semiconductors. Found mainly in the mineral stibnite, it has applications in both industrial and medicinal fields. China dominates the global antimony supply, controlling the majority of mining and processing. The country accounts for over 70% of the world's antimony production, with significant reserves and refining capabilities. The first stock Hick is recommending is a miner. He says this about it, a little-known $10 mining company that controls the only domestic antimony reserve capable of meeting Department of Defense needs. And according to Hicks, the Pentagon has declared this mine holds the sole domestic geologic reserve of antimony that can meet Department of Defense requirements. This company is Perpetua Resources and the ticker is PPTA. Perpetua Resources is a mining company focused on the redevelopment of the Stibnite Gold Project in central Idaho. This project aims to restore an abandoned mine site while extracting gold and antimony. The Stibnite Gold Project contains an estimated 148 million pounds of antimony, representing the only identified domestic reserve in the United States. Once operational, the project is expected to supply approximately 35% of U.S. antimony demand during its first 6 years of production. In January 2025, the U.S. Forest Service issued the final record of decision, authorizing Perpetua's mining plan for the Stibnite Gold Project. This approval followed an extensive 8-year review process. The project has also received support from the U.S. Department of Defense, which awarded $59.2 million under the Defense Production Act to advance its construction readiness and permitting. I personally don't think this stock is a buy right now, and here's why. First is plunging stock performance raises red flags. Perpetua's stock recently experienced a sharp decline, dropping 22.39% in a single day, with a significant 31.66% fluctuation between its daily high and low. Such volatility can be alarming for investors seeking stability. Second is financial fundamentals signal weakness. The company's financial metrics reveal concerns, including a return on equity of negative 18.67% and a return on assets of negative 33.44%. These negative returns suggest inefficiencies in generating profits from its assets and equity. Third is elevated valuation amidst negative earnings. With a price-to-book ratio of 10.9, Perpetua's stock appears overvalued, especially considering its negative earnings. A high PB ratio in this context raises questions about the stock's true value. Fourth is insider ownership remains minimal. Insiders hold only 1.90% of Perpetua's shares, indicating a limited personal stake by those closest to the company's operations. This low insider ownership might be a concern for investors looking for management with significant skin in the game. Fifth is legal scrutiny adds to investor caution. The Rosen law firm has initiated an investigation into potential securities claims on behalf of Perpetua's shareholders. Such legal actions can introduce uncertainty and potential financial liabilities, which may deter prospective investors. I'm going to reveal my guess for the next stock in about 20 seconds. But before I do that, I want to remind you to click the link in the description to check out AlphaPicks. I reviewed over 100 stock picking services, and AlphaPicks performs the best and actually beats the market easily. If you click the link in the description, you get $50 off AlphaPicks. So go ahead and click that link and take advantage of this amazing deal. There's only one clue for the second stock, but it's enough to figure it out. The clue is Perpetua Resources has formed a groundbreaking partnership with America's only antimony refiner, a little-known $1 company in Montana. This stock is United States Antimony Corporation and the ticker is UAMY. This exploded in the last year and is up over 800%. United States Antimony Corporation is a mining and chemical company focused on the production and sale of antimony. The company operates in the US and Mexico, extracting and refining antimony from its own mines and third-party sources. It also produces zeolite, a mineral used in water purification and agriculture. UAMY benefits from growing demand for antimony in defense and technology applications, but faces challenges such as fluctuating commodity prices and supply chain risks. I'm sure everyone would have loved to buy United States Antimony Corp last year, but right now I don't think it's a buy anymore, and here's why. First is financial red flags. Consistent losses raise concerns. Despite a 28% increase in revenues to $2.83 million in Q1 2024, UAMY reported a net income of just $86,000. Over the last 12 months, the company faced losses totaling $4.42 million, indicating ongoing profitability challenges. Second is operational shifts. Ceasing Mexican activities adds uncertainty. In March 2024, UAMY discontinued all operations in Mexico, aiming to reduce overhead and improve financial health. While this move might cut costs, it also eliminates a segment of their operations, potentially impacting future revenue streams. Third is stock volatility. Rapid price surges may signal instability. UAMY's stock has experienced significant volatility, with an increase over 800% over the past year. Such rapid price movements can be risky for investors, as they may not reflect the company's intrinsic value. Fourth is high valuation metrics. Elevated ratios could indicate overvaluation. The company's price-to-sales ratio stands at 20.1, and the enterprise value-to-sales ratio is 19.0. These high valuation metrics suggest that the stock may be overvalued relative to its revenue, posing a potential risk for investors. Fifth is analyst caution. Price targets suggest limited upside. Analysts have set a 12-month price target of $1.75 for UAMY, which is a decrease of approximately 7.89% from its current price of $1.90. This indicates limited upside potential, suggesting that the stock may not be a favorable buy at this time. And make sure to click the link in the description to check out Alpha Picks. This is the best stock picking service, and clicking the link saves you $50 on this awesome service. So go ahead and check out Alpha Picks now and put yourself in the best position to win with stocks.